I'm joined by CEO Tom Evans. Thank you very much for making time for us today. A lot of questions about why go public now in a nervous market like the one we're in.
Well, you know, we're really thinking about the company's growth prospects over the long term. You know, we can't control the day-to-day environment. It certainly can't control what's happening in places like Greece. But our business is good. Our business is on a very good trajectory, and we think there's significant growth in the company over the next several years.
Now, you're priced at 15. You're trading below that right now. How did you react to that initial doubt?
You know, listen, I certainly can't control the market, and you know, again, we're thinking about the business not on the first day, but really, you know, over the long term. And we've got a growing company. The company's doing very well. We've got, you know, great cash flow. We've got great profit margins, and you know, we think the company's going to continue to do well over a long period of time.
Tripled revenue up through March and quarter past. It was impressive. I want to ask you, you've been acquisitive, very acquisitive. Acquired a company every year since 2005. Are you going to continue to do that as a public company now?
Well, we'll acquire where we think there are great opportunities, and we think we can get great values, and where, you know, we can make, you know, sort of the cliche 1 and 1 equal 3. And so we've been able to do that to date. You know, those assets are difficult to find, but we're going to grow. I mean, even if you look at just the organic growth in the company, the first quarter was over 40% in revenue, over 70% in EBITDA. So the company will do very well, you know, as a steady state company. We think that there are acquisition opportunities that we can look to as well.
Now, you provide interest rate information. You're advertising dependent there. When you're in an economy like this one in the United States, where you ask about advertisers feeling confident spending on financial product information, how do you promise to the market that you're going to be able to continue profitability and revenue growth?
Well, it isn't just interest rate information. I mean, one of our largest growing sectors is people looking for insurance, and people are looking to save money. You know, the billions of dollars that the Geicos and insurance as the worlds are spending, telling people you can save money is a great catalyst for our business. We're also in the credit card business, and credit card issuers are actively and aggressively trying to acquire customers. Direct mail is no longer the source that it was at one point, and places like ours, creditcard.com, is a great platform for being able to acquire those consumers. So,
is that where you're seeing the most possible growth?
The most growth right now is in the credit card and the insurance verticals, but the mortgage vertical and the deposit vertical are held up much better than you would have thought in an environment like this. Yes.
Now, this isn't the first time that you've helped take a company private to the public markets. GeoCities took public 1999. Then you sold it to Yahoo. You took Official Payments public 3 years later. It was acquired.
I have a tough time keeping a job. Well, you know, I came out of traditional media, and at the time, in the late 90s, internet companies were looking for people who had a media background, a management background, and could ramp revenue. And so, you know, I was fortunate. I left the magazine business when it was a great business. I got into the internet early, and was fortunate to be with a couple of great companies who were able to take public and then got acquired.
Well, we shouldn't say that's going to be a pattern that's going to continue in this instance.
Bankrate is by far and away the best asset that I've been connected to. It's a great consumer service. It's a wonderful business, and we think we've got tremendous growth prospects going forward. So,
all right. Mr. Evans, thanks for giving us time today.
Thanks very much. Thank you.